Per usual, everything on this channel is for educational purposes only, is not intended as financial advice. It has been a quiet couple days here. Price-wise, not too much is happening. Even today with the curve, DeFi issues, ETH not really moving, BTC not really moving. Maybe as people start to come back from summer activities, markets pick up again. Maybe things in August, September actually see some volatility, and then we get some historically positive volatility in Q4. At least that's what we've seen over the past decade for the most part. I always like to look at the power law corridor or the 2-year moving average multiplier just to sort of level set everything as maybe near-term bearish as I feel, or as hopeless as some of this lack of inflow activity volume feels. I have to remind myself that a lot of this also occurred at other times where we've been historically at a low point in a cycle. So it's not unusual to be sort of drifting kind of aimlessly here in a pre-halving year, where at the end of the day, if you're in the accumulation game, you prefer lower prices. So I don't think this is a bad thing. Just looking at the power law corridor relative to the halvings, generally there is a cycle low, cycle high relative to halvings about a year after the halving. It's where we see that cycle high. So we are a long ways away from that, but it's good to get some perspective just in case in the short term things don't look too on the up and up optimistic. Anytime we see a lack of volume or just no volume, typically that's generally very bearish because it just signifies hardly any people paying attention, no inflows, that sort of thing. But realistically, this looks completely fine where we sit here. Not even just trying to be optimistic, just that's what it looks like. It looks like we are in this bottom band, of accumulation where we've been pre-halving, even after halving. Being in this level is perfectly reasonable based on historic trends. Bollinger Bands we looked at last week as well haven't really changed. They kind of level off here. I don't think they honestly can get much tighter than this. Without zooming out, without looking at Bollinger Band width, it's hard to tell that this is the tightest we've ever seen Bollinger Bands. Generally how these work is as price is consolidating, these yellow lines contract, and if price is holding above the 20-week moving average as price is consolidating, generally you expect bullish continuation. Here's an example in 2020. If we're consolidating and contracting on the bands and we are below the band, you expect bearish breakdown. Again, it's hard to really tell that this was a squeeze, that this was a squeeze. But this is definitely a squeeze here. And as we sit just trading the bands, I would expect bullish continuation. But until you get the move, until you're actually sure, it to me always feels like a 50-50. Now, if you've got week over week over week over week pushing the bands higher, then it's very easy to assume that, yes, we're going to see higher highs. Not necessarily, 20 weeks of higher highs, but something, right? Just as we were pushing lows in 2022, after consolidating, the expectation was, okay, we are going to keep pushing lows. So until we actually move on this thing, it's really hard to say definitively what's going to happen here because it really feels like a coin flip. Now, I can't not see this head and shoulders or whatever it may be, right? Maybe it's nothing, maybe it's pareidolia, but to me it just looks like, triple top sort of activity that I can't shake and also worries me from a bullish perspective. The good news is cloud support's here. The weekly 20 MA support is here. The 200-day moving average is at 26.6 along with the yearly pivot, along with in the mix is this diagonal on the previous two lows. So there's a ton of stuff here to act as a cushion between 28 and 26. That's the good news. The good news is this should hold the MAs, the moving averages, the cloud. Plenty of evidence to support price holding here. And I guess really the good news, depending on how you want to view this, is if we break below those levels, if we close below 26, close below 25, for me, there is definitely an expectation of bearish continuation to the downside. In the near term, though, we do have a bit of a falling wedge here. We had that similar pattern April, May, June. So nothing's really screaming bearish here. There's also declining volume. Nothing screaming bearish, nothing screaming bullish. Trend itself is bullish, remains bullish based on moving averages, based on cloud. And really we're fine up until probably 25K. You know, below 25, basically a new lower low here. And then to me, we are in bearish territory. So it gives a lot of room for a lot of interesting wicks or candles or whatever, right? Up until 25K. So I would love to see a wick into 28, into 27, something like that. Or some sort of, you know, parabolic fake out into 28, into 27, and then a sharp reversal, much like we had already twice this year. You know, that would be a great sign that, okay, buyers are finally ready to step in, because they're certainly not at these prices. You know, we keep consolidating at lower lows, lower lows, lower lows after that ripple excitement. Now, some people are going to point to the weekly cloud and say, well, Josh, you told me in your cloud video, we're in the cloud, we closed in the cloud, bullish TK cross, this should trigger an edge-to-edge trade. Now, technically, we haven't quite closed in the cloud. We opened in the cloud, but we haven't closed in the cloud. It's not me hedging my bets. I'm just saying, look, wouldn't it be amazing if this was the week that we actually closed out of the cloud somewhere around 26 and then began the move, potentially, to 42, 43, whatever that is up there. Because your stop loss for this cloud edge-to-edge trade at the moment is somewhere around 23K, and that isn't a great risk reward. So I'd love for price to come back down to 26, Kijun moves up slightly, starts to move up, and then you're effectively, you know, it's a better risk reward. Your stop loss has moved up at that point. But this does look good, I'm not going to lie. This looks really good. I just don't want to jump the gun here and assume like, okay, we're all good, everything's going to be fine, when it very much feels like the market right now is completely dead. You know, you have an attempt at higher highs just smacked down immediately, and then we've just continued to consolidate at a low, consolidate again, another low. You know, there's no urgency here for buyers to step in just yet. And just measuring this out, again, that measures a 27.8, whatever that is. So perfectly reasonable for us to continue. And the opposite would be true if we were consolidating at highs, but we're not. We're not consolidating above 31. We're consolidating below 30 at this point. So we are slowly tipping, leaning bearish here. And, you know, this is the head and shoulders type of pattern that worries me on both ETH and Ethereum. With Ethereum, the ascending triangle comes into play. You know, we're kind of squeezing into this wedge here. We've got some time. This could go to October. I mean, wouldn't that be fun? Just zeroing out on ETH until October. But ultimately above 2000, ETH looks okay. For highs and below at this point, 1760. You know, ETH would be in trouble. But I can't see this pattern on both of these charts and expect magical reversals, right? Until we actually start to break highs, it's very hard to look at this and just assume things are going to be bullish. So before I talk about ETH, let me mention today's video sponsor, KrakenPro. KrakenPro is a complete overhaul of the Kraken trading experience with a one-stop shop for advanced and professional traders. KrakenPro enables efficient trading execution across multiple markets with a UI that allows for unique optimization tailored to your trading style. Here's the UI, completely revamped from Kraken of days old. I've used Kraken for years personally. I've sent many IRL friends and family to Kraken, onboarded smoothly and successfully. So if you've never used Kraken or haven't used them in a while, you can check them out with my link in the description of this video. So back to ETH. Now again, we have this ascending triangle. It looks to me like this should win the day, you know, but this is setup Sunday and we're looking at this every week and not much has happened. So I don't, you know, it's very hard to say this is going to be the week, guys, because I don't know. It just doesn't look like it wants to move. Even this, you know, semi-news catalyst of DeFi kind of melting didn't really matter to price, right? Maybe it'll matter when US Open happens tomorrow. I don't know. Ultimately, this pattern isn't at risk until we make a new lower low somewhere around 1600, and 2000 is definitely the level where anything above that, and it's go time. So the pattern itself has a bullish bias. The problem with the pattern is with triangles like this, they typically and should break when 3 quarters complete, somewhere probably, you know, around mid-May. At this point, when you're getting triangles to just sort of color in the entirety of the pattern, that bias tends to fade based on probabilities, let's say. So that doesn't mean it can't break up. It doesn't mean I'm not still bullish on it, because I am. I just don't know at this point what it's going to take. Probably some sort of regulation changes. I don't know. Do we just go zero out on this, hold under 2K until the election? I mean, I don't know what it's going to take. FOMC didn't even move anything. Maybe a strong reversal in the S&P or an all-time high in the S&P would move Bitcoin and ETH. I don't know. I don't know what it's going to take at this point to actually move price. But if you're in accumulation mode, like many people are in Bitcoin, you don't really care, right? You want flat prices. You want low prices. You want to continue staking, whatever it is. We're certainly not at the high of a cycle. You could argue that. So there's plenty of time for this thing to make a decision down the road. I don't think there's any hurry, clearly. And on the weekly chart, very much like the Bitcoin chart, there's a setup based on the cloud known as an edge-to-edge trade. Once we start to close within the weekly cloud here, there is an expectation that we will make at least an attempt at a move to around 2,800. So this thing may go flat. It may snake around the cloud here. Who knows? But it's got time. It's got plenty of time. Bollinger Band's also tightest they've ever been for ETH currently. So truly not much going on with Bitcoin and ETH. Now for this DeFi issue, I think it's still in the midst of actively happening as of late Sunday Eastern here. So it looks to be some sort of vulnerability affecting a few projects, including Curve, and we're certainly seeing that on the Curve chart. Whether or not this is the end, I don't know. Curve had looked okay compared to most alts. It certainly had looked worse than maybe Comp or Aave, worse than Maker. It's not really lending and borrowing anyway. To me, it's more DEX, uni side of things. The uni chart looks just like this as well. So if you're in the business of buying blood this week and this thing continues to melt down, maybe something to watch as we go forward here. Really great Adam and Eve here, man. Sometimes when you just look at charts you don't look at and you see something, you're like, wow. That's why having scans or looking at random stuff every once in a while can be pretty interesting. Link also continues to look okay price-wise. You can say they've got all sorts of fundamental this, that, and the other thing. I don't really care. Okay, at this point, it is what it is. But anything above 850, and we should be good to go on this chart. Probably has a little bit of time. Probably doesn't break up this week, but it's definitely worth continuing to monitor. For me, I like it above 850. Some people would say, well, it's already broken out at that point. Who cares, right? I like it at anything below 6. That's fine. I just prefer, me personally, most of the time to buy strength, especially in alts. I do not like buying weakness in alts. I'll buy weakness in Bitcoin and ETH. Buying weakness in lower market cap coins tends to be pretty dangerous. I know Link is pretty high up there, but typically not super profitable for me anyway. Litecoin halving is this week. Happy halving, Litecoin, for the 5 people that care. On the chart here, I have the orange is Litecoin halvings, the yellow is Bitcoin halvings, and as you can see, price has tended to, historically, have a little tiny run into the halving and then kind of get faded a little bit. And then actually what's more important for Litecoin is the Bitcoin halving in yellow, okay? That's when price actually moves historically. That isn't to say it's happening again this time, but the Bitcoin halving has been more important for Litecoin than the Litecoin halving based on this chart. It's certainly seen bigger moves post Bitcoin halving than post Litecoin halving. That being said, on the weekly chart here, much like Bitcoin and ETH, and a lot of coins really, there's a potential for a move to 230 on Litecoin. Now, on a relative value opportunity cost basis, is that a good trade? Probably not. But, if you catch this on leverage or you're a Litecoin maximalist for whatever reason, you're happy. But I definitely like that level. No clue on the time consideration. This could take well past Bitcoin's halving. So I would definitely have patience with that one. Stop losses for that, by the way, would be bottom of the cloud or the Kijun, somewhere around 80, 85, let's say. So pretty tight stop loss on that, honestly, for a decent risk reward setup there. Now to some legacy stuff. Just briefly, I'll mention DXY. the reason it's so important to watch this, historically, if DXY is bullish, risk markets are bearish. Crypto's a risk asset, Bitcoin's a risk asset. So we want to see a bearish DXY. Good news is we are still in a bearish channel for the DXY, below the daily cloud, below the 200-day moving average. Certainly by any metric, this thing is bearish. Now, if we start to get above 103, above 104, then we're in trouble on the risk asset side of things, most likely. So I expect Dixie to continue to snake its way lower or within this channel at the very least throughout the week, but definitely worth keeping an eye on. Oil is another one from a inflation perspective. We do not want to see oil go higher. I just looked at gas prices today locally around $3.90. Definitely on the higher end over the past couple of months. And chart-wise, oil looks like it wants to go higher. So those supply reductions, manufactured supply reductions, finally taking effect here would be my amateur analysis with OPEC. And we are finally seeing some strength with oil. You know, my other amateur side of me is like, okay, if everybody's expecting a recession, but we're not seeing it yet, but we'll probably see it over the next 12 months. You know, we could see oil to 100 and then oil right back down to 70 to 80, you know, dependent on economic conditions, right? So we'll see. But chart-wise, this thing looks very bullish relative to where it's looked for, you know, the past 2 years. By the way, at the top, another decent example of an Adam and Eve, or at the very least, you know, an M double top. So I do like higher highs for oil, unfortunately. Coin also probably is okay as long as it's above the cloud. Kijun's at 80. You know, maybe this is some sort of falling wedge, much like spot Bitcoin. Coinbase does have earnings this week on Thursday, so that should be interesting for this chart as well. But from a cycle perspective, I like highs. I like buys at lows. You know, I like all that sort of thing for anything crypto related, and that includes Hood. Hood also continues to look good to me as long as it can hold above 1250, whatever that is. I don't know. You know, I don't expect this thing to move quickly, but chart looks good. And a lot of the ARK related stuff kind of slow in the pickup for me on the daily cloud. It's been bullish for a while, but a lot of the random stuff that nobody but ARK talks about is starting to pop off. Roku, Teladoc, I don't know, you name it, right? And you're definitely seeing that on the chart here. So would I buy ARK here? Probably not. I'd probably consider it, you know, at some sort of Kijun bounce, but undeniably, it's making higher highs. Cloud likes it. I don't quite think this is some sort of like inverted head and shoulders here, but maybe. Looks okay. Looks okay. Lastly, I'll just mention for the week, GBTC and ETHE, the discounts have gotten slightly bigger over the past week. And I think that's kind of just, you know, apathy relative to what's going on in crypto land versus legacy land. Everybody's kind of waiting for the BlackRock ETF to happen. I'd expect ETP and ETF flows this week to be flat or down again. You know, I don't think there's any massive inflows that I was able to see over the past week. So you're seeing that on this discount getting slightly wider. But again, if you want Bitcoin on sale, ETH on sale, not a bad trade. Yes, there's a massive fee there. But if you're bullish on the eventuality of a BlackRock ETF and maybe even, who knows, X years down the road, an ETH ETF or some sort of conversion or something, right? Some sort of regulatory relaxation for the possibility, you know, the massive hopium for all this stuff. But yeah, I think that's what the market is starting to price in at the very least. And historically, we can go all the way back to 2016, the premium or the discount, in that case it was a premium, would shift relative to approvals or disapprovals or dates for the coin ETF at that time, the Gemini version. So anyway, 2 other products to pay attention to, you know, directly or indirectly, just as a gauge for how the market is feeling. That's all for this one. Hopefully we see a move this week, but like, dislike, comment, share, subscribe. Happy trading.